Hey, God bless you. Happy Thursday night. Welcome to the free Dominate the Tax Game webinar with me, Brianna Anderson. I apologize about the delay. I got time just got ahead of me. Thank you guys so much for tuning in. Do me a favor, take a moment and take a share, press the share button, tag a friend, comment so that I can know that you can see me. We are about to get this training started. For those of you who are wondering what we're talking about tonight, I am going to show you how to dominate the tax game. I'm literally going to show you how to stop leaving money on the table every single year during tax time. I'm going to show you how to stop overpaying the IRS, right? I'm going to show you how to maximize those dollars, how to have real life strategy during your tax life as a taxpayer, no matter how much money you make. So you could be a multi-millionaire, you can make it $100,000 a year, $40,000 a year, $30,000 a year. It does not matter. All of the strategies that we're going to teach tonight literally can help someone. So I'm so happy that you guys are on. And I'm going to tell you guys now, this is going to have to be 2 parts because it was just too much. So tonight I'm going to kind of tackle what we can tackle, but we're going to get to like the real meaty, the real gritty meaty, because my whole goal tonight is to show you guys how we help thousands of people every single year, whether through our personal tax business, through the offices that we are franchised with, or to any of the people that I help train to start their own tax business or become a tax preparer. The content and the value, the education is the same. Our goal is to help our clients maximize their dollars. All right. And one of the things that people don't understand, hold on one second. Let me send an email out that we're live. Hold on. All right. Great. What a lot of people don't understand about the IRS, a lot of people are afraid of Uncle Sam, right? A lot of people are afraid when they hear that 3 letters IRS. But I want to show you guys tonight how not to be afraid, okay? Because one of the biggest misconceptions about the tax code, some of the, one of the things that everybody gets wrong is they feel like the tax code is punishing us, or, we should just pay what we owe. Most people think if I earn $50,000, I owe taxes on the whole $50,000. Some people think like credits and deductions, they're just something, but at the end of the day, I still got to pay Uncle Sam. They don't go into the deepness of how the tax code works legally, how the IRS system is set up, strategy upon strategy. And so in reality, the tax code is full of incentives really designed to help reduce the taxable income that we owe. Not only that, but the tax code very much so encourages investments. It encourages business activity. It encourages savings. And the reason why most of us miss this is because we haven't been taught it. And I don't know why it's not taught in school. Can I be honest with you guys? Like, I'm looking at y'all joining in to me tonight. Thank you for tuning in. I don't know why this type of information is not taught in school, period. But in other words, it's not just rules to take our money. It's a system designed for planning, wealth building, and legally keeping what we earn. We just got to know how the system works. If you have a product and you open the product, right, and you don't know how to use the product, you never had a product like this before. If you don't look at the instructions, if you don't look at the user's manual, guess what? I guarantee you're going to either put that product together wrong, you're going to use that product the wrong way, you're going to find out you have to go back to step 1. That's how I feel about the tax code, all right? Honestly, people just don't know. And so I'm here to teach, all right? So tonight is absolutely free. I want to share with you guys how we're going to build wealth. I am truly a wealth builder. I believe that the tax code has helped the wealthy become more wealthier. All right. And I believe that we can use our strategies. We can use our tax refunds. We can use the money that we save, the money that we've been leaving on the table. We can literally use this money to build wealth. All right. Whether that's we want to become investors in gold, silver, whether we want to invest in REITs, whether we want to invest in stocks, we want to become day traders, whether we want to invest in IRAs, no matter what we want to invest in, we can find money that we're leaving on the table with the IRS legally with using the tax code, and we can literally use that money to build wealth. All right. Okay, guys. I forgot. I'm not on Instagram tonight.
Become more wealthier.
So,
and we can literally use that money.
My God. I'm not on Instagram tonight because I forgot to tag it, but it'll be all right. Anyway, let's get started, guys. So I'm going to share my presentation tonight just so you guys can kind of go through some slides with me. But again, a lot of people underestimate the strategy. You know, some people say, you know, I just pay my taxes when I file, no big deal. They're missing the whole thing. Really, strategy on taxes is done before tax time. If you're waiting on tax time for taxes, you're already missing out. You're already behind time. All right. And so anybody can tax plan. You do not have to just be wealthy to tax plan. And that is what I'm going to share with you guys on tonight. All right. So let's get started. Tonight, I'm going to show you how to dominate the tax code. I'm going to show you how to stop leaving money on the table and start leveraging the tax system like the wealthy do. For you guys who don't know, my name is Brianna Anderson. I am a serial entrepreneur, millennial wealth builder. I have been in the tax industry for over 10 plus years. I have helped start over 22 tax offices. I own my own professional e-file provider tax software. I am a licensed ERO. I have a tax school where I show other people how to start their own tax businesses, tax franchise, become tax preparers from home. And so I am everything taxes. Okay, let me just tell you, for those who do not know, I was doing taxes before I was in the credit industry. Before I was in the funding industry, your girl was back here planning in the tax industry. And so I have been through a lot of changes when it comes to the tax industry. But I just want to let you guys know here tonight is that one thing about the tax industry is that it is always going to be lucrative. Okay? Depending on how you position yourself, the tax industry will always be lucrative. So tonight we are going to learn the number one mistake taxpayers at all income levels make. Let me just say this. Most people think that you got to be rich to have tax problems. Okay? You do not have to be rich to have tax problems. The number one mistake taxpayers all income levels make, I'm going to show you what that is tonight, because you can have tax problems and you can have tax mistakes and you only make $40,000 a year. Okay, I see it every single year. I see people who should have a way bigger refund legally, and they don't after I look at their tax returns for previous years. And so there's some mistakes that they're making, right? I'm going to show you tonight how to maximize credits and deductions, whether you are a low income earner or a high income earner. There are credits and deductions that the tax code has legally mapped out for us to use. They are there for us. Somebody say they're there for me to use it. I should be able to use it. I'm going to show you tonight simple strategies the wealthy use that you can use as well. And I'm also going to show you how to turn everyday expenses into tax savings. Like, you will be surprised how right now this webinar literally just turned into a write-off. Why? Because this is a business activity that I'm doing right here in my home office. Y'all not saying nothing to me. So I can legally invoice myself for using my home office to record this training. All right. That's going to be a deduction taxes to me. And so this is what I mean when I say I'm going to show you guys how to build. Okay. So taxpayers overpay. Let's find out why. Number one, they don't know the rules. Most when it comes to taxes. Most people don't know the tax rules, the tax laws. No, we got to pay taxes. They just know that's all they know. They don't know nothing else. So one of the number one reason most taxpayers overpay, they just don't know the rules. The game.
All right, guys. I have no idea what happened. Thank you guys so much for hopping back on with me. Absolutely baffled, okay? Absolutely baffled. Have no idea what's going on. But anyway, we're gonna keep this webinar going, okay? For number one, we're gonna keep this webinar going. I'm on my phone right now. So let me just find out how to get on here all the way. Cause it looks like I think my presentation is still up, but it's not up. So y'all give me 1 second. This is so crazy. Yeah, thank you so much. I don't know. It does that. I don't know if it's I think it's the area we live in. We gotta really work on getting our internet fixed. We probably work on that tomorrow and find out what's going on. But also I think it's something going on with yeah, I think something is also going on with the actual um system as well. So yeah, because I'm here and I just I don't even see myself. It's just crazy. Okay, there we go. There we go. All right, guys. So sorry. We have to get the presentation back up some way, somehow. But if you guys are just joining in, welcome to the Dominate the Tax Game free training. And I am Brianna Anderson. I just went through so much and then everything just went off. So I know, right? God bless you. Thank you. What we're going to do is continue on where we left off. But it's something, yeah, it's definitely something going on because everything is frozen. So it's not, I don't think it's StreamYard. I actually think that it's yeah, I think that is just the internet, period. But tonight I'm going to show you how to stop leaving money. That's why it's so good that it's in me and not on me. I'm going to show you tonight how to stop overpaying the IRS, how to stop leaving money on the table, whether you're a high income earner or a low income earner. I am going to show you the biggest mistakes that both make. I'm going to show you how the wealthy use the tax code to continuously stay wealthy and get more wealthier. I'm going to show you how to legally use credit and deductions for your advantage every single year. And I'm going to show you how you should not wait to tax season to really, really, really get serious about having a tax strategy. We help hundreds of clients every single year create strategies on maximizing their tax time, the tax time. But here's the thing: a lot of them don't qualify. A lot of them are not in the right place because why? Because they don't have all through the year their themselves together. And so right now I'm starting a little early. Normally I start a little later, but this year I'm really starting a little early, preparing people for tax season for next year. I want you to without a doubt know what you qualify for. I want you, when you go to your CPA, when you go to your tax preparer, I want you to without a doubt say, hey, make sure you file this. Did here, I want to submit this. Why is this important? Because the average person, we'll talk about this a little later. I found out the average person just files whatever someone puts on their return, right? Because they don't know. So they thinking like most of my clients, I'm just gonna be honest with y'all, and this is not all, but most of my new clients that come to me, they who went to a CPA, those are the ones that I have a lot of hard work trying to really get them all the money back pay that they owe that they earned. A lot of people, CPAs, I'm not talking about all CPAs, just hear me, some CPAs, those who are not really knowledgeable about the tax system, they just file stuff. Boom, they file it. And you be right here owing on stuff, no questions asked, no type of survey, nothing. And you be right here owing stuff that you really should not owe, right? And so I help those are like the biggest clients I have to help. Another type of client I have to help is people who file themselves, okay? A lot of people who file their own taxes using free tax software or low cost software, it's fine. But remember, sometimes with those softwares, there are things that they will suggest to you that are the everyday norms, like the earned income credit. Of course, we know that. Child tax credit. Of course, we know that. But what about the other things that you may qualify for, but but they won't suggest that to you because you're not really that average type of client. And so you need to know your own self. what you qualify for. While my computer is starting here, you need to know your own self what you qualify for. You need to ensure that you are maximizing every dollar, and not only you're not leaving money on the table where you can really be getting more back in your refund, but how about you not overpaying the IRS? Because here's the thing. The IRS is not going to come to you and say, "Hey, Brianna, guess what? We see that you paid us and you qualify for A, B, C, and D." They're not going to do that. What they will do though, they will go in and say, "Hey, you owe us more money. We see that you do A, B, C, and D. You owe us more money." And so we change your return. Sorry guys, I'm logging in. We changed your return and now you owe more. Like, they will do that. So let me just say that. They will do that. And so now I'm coming back in, guys. Praise the Lord. Um, and so you need to know how the system works for your advantage. For me, my goal is I like to show clients whether you're my client or not, right? I want to show you how to maximize the tax game for yourself. I want to show you what you need to do. I want to show you how to build wealth using your tax return, all that. That's what I want to show you tonight. All right. So boom, let's get started. We logging back in. I can put my presentation back up. Praise the Lord. All right. I'm coming back in. Boom.
Awesome. I'm back. See how fast I came back? I'm back. Awesome. All right. Thank you so much. No, God bless you. Thank you for staying on. Yeah, it does happen, right? So, again, how to stop leaving money on the table and start leveraging the tax system like the wealthy do. All right? Remember, tonight, here's what you're going to learn. The number one mistake all taxpayers make, all income levels, whether you're low income, no income, high income. I guarantee you there's some mistakes that you're making. How to maximize all credits and deductions, whether you're a low income earner or a high income earner. Here's another misconception that high income earners are the ones that have to pay the most taxes back. Can I tell you something? To me, the tax code was created for higher income earners, but they also were created for a certain type of high income earner too. Most people, I tell one strategy, shift them from being a payer of to the IRS every year, or someone who is on the bottom. You like catfish eat on the bottom? They bottom feeders, You can go from being a bottom feeder. One strategy can make you up here at the top. All right. You up here swimming high level, sea level. Come on. And how to turn those everyday expenses into tax savings. And so here's the thing. Most people overpay taxes because number one, they don't know the rules. Number two, they rely on the filing software. We're not just telling y'all about that before the presentation even came up. Come on, that's because it is in me, not on me. Some people they file them taxes themselves, and because they're filing and they're using the softwares, they think that's it. But I'm telling you, it's so much more. Okay, I'm just telling you, it's so much more. Watch this. Hold on. Hey, God bless you, girl. Blessings. Grab your pen, notepad. All right. Yeah. So these webinars are going to be happening every month up until tax time because I want everybody to stay informed. Okay. Now, here's the thing. The tax code is massive. Okay. The U.S. tax code is massive. It is the official tax law written. Okay. It's long. It's pages long. Okay, just the statutory tax code is about 2,600 pages long, but the full tax systems, the regulations, the rulings, all that's about 70,000 plus pages. But what I just want to share with you guys tonight on how you can plan for year to year using the things I'm going to share with you. You don't have to do all that reading. I've done it for you. Okay, I've done it for you. Just pull out your pen and paper. And just know that if you don't plan throughout the year, during tax time, you're getting the bottom of the totem pole. Okay? That's for sure. Now, most taxpayers leave money on the table every year. Most do. And let me tell you how many people do. 66% are overpaid taxes. Okay? 66%. 66% of people in the U.S. are overpaying taxes. only 34% are really being refunded. Come on. So this goes to show you that there's somewhere, somehow, a level of knowledge that's just missing. Okay? Now, one of the things I realized when people, one of the mistakes, failing to plan throughout the year. If you wait until tax time or tax season to think about what you qualify for, you already messed up. If you don't track your expenses, whether that's your business or personal, let me tackle this. Most people think that you just got to have a business to write off expenses. I'm going to show you tonight. You don't. Personally, you need to be tracking all your expenses. Most of you guys who are probably watching me, you got expenses from doing a lot of different things that you didn't even know you could write off. Like you paying a lot of out-of-pocket co-pays. You know, you paying a lot of out-of-pocket expenses for trainings and mentorship. It's a lot of things you're doing. And so a lot of people, they're ignoring credits and tax advantage account. Some of you guys have a great job, and so you're career-based. And so there are a lot of things that possibly you can qualify for and write up on your taxes just because you're doing a certain type of thing with your job, with your corporation. And so tax strategy for me is not seasonal. It's year-round. Okay? That's what I really want you guys to know is year-round. What we've been able to do, we've been able to go back, review tax returns for our past clients, and help them not owe the IRS legally. Like, can document it and prove it. Because they've been overpaying. Some of them have accumulated so much IRS tax debt that once I actually review their lifestyle, review their expenses, review what's been filed, they should have been getting a refund back or breaking even, period. They should have never been paying. And so because they don't have a tax strategy in place and because they feel tax season is seasonal and not year round, they're missing out. So let me tell you, I'm a wealth builder. Tax season for me is all year. Tax bookkeeping for me is all year. Account and most people say, I don't know that. I don't know how to do it. You can learn. It's super simple. When you're working with a tax strategist, not a CPA, not just a CPA, not just a tax preparer, but a tax strategist, one that will help you create a strategy that the way you know what to look for all throughout the year. So during tax time, you're ahead of the game. Come on. So number one, let's start with low income strategies. So if you're anywhere and you're making between $0 and $70,000 to $100,000, you're really considered low income to the IRS. Let me show you. I want you to maximize these credits and deductions. I want to show you how to keep more of your money. I want to show you a strategy for every dollar that you earn. All right. I want everybody to stay with me to the end because I'm telling you, I'm going to go from low income to high income. And I'm going to show you how all of us can switch over and use the tax code as a way to build wealth. We got to make a switch though. Okay. So number one, understand your income type. This is for everybody, really. Understand your income type. For most low income earners, this is earned income. If you have wages, salaries, tips, self-employment income, this is considered earned income. Okay. Some of you all may also have unearned income like your interest, dividends, unemployment benefits. Why does this matter? Because certain credits and deductions are only available for earned income earners. So if you have any type of earned income, there are certain credits and deductions that you qualify for. Okay. That is so important. Number one, everybody should be familiar with the Earned Income Tax Credit, the EITC. That is the most filed credit right now. Really, honestly, it's the most number one used filed credit. An example would be, let's say if you're a single parent and you earn $25,000 per year, you could qualify up to $6,000 back. The credit increases with earned income up to a certain point, but then it starts phasing out as your income gets higher. So if you based on your filing status, because your filing status also predicts your refund and how much you owe as well. Okay. Also, more children equals higher maximum earned income tax credit. Okay. Let me just say that most systems, some, not all, when you are doing your taxes yourself, they won't automatically add earned income tax credit. We found that out last year. Well, a couple of people was like, Well, why is your estimate 40 why is your estimate like $1,400 more than what this system over here, I'm not gonna say no names, this system over here is saying? And I said, well, let me log into the system. And then when I log into the system and I go over to the summary page that shows a review of everything that they're qualifying them for, or earned income tax credit wasn't on there. And then when I went and looked at the questions that they answered, one wrong question on those yes or no questions when you're filing your taxes yourself, one wrong question will automatically cancel out the earned income tax credit. Okay? So some systems won't manually add it for you. And then some systems, when you're answering all of those yes or no questions to qualify, if you mess around and click yes and it should be no, they'll remove that entire credit and your refund goes down. Okay? So always remember, the earned income tax credit reduces the tax owed or increases your refund. Here's a huge issue I have to deal with people every tax season, because they be like, how her refund for $7,200 and my refund only $4,000 and I got more kids than her. Well, let's talk about it. Is your incomes the same? Right? Is your incomes the same? Is the ages of your children the same? Come on now. Okay? The taxes paid, is it the same? So you will never have the same refund as the next person unless y'all are just absolutely the same people, making the same amount of money, paying the same amount of taxes. You got the same amount of children. You got the same amount of debt, A, B, C, and D. So let's say if you qualify for earned income tax credit, and let's say based on your children and your filing status, they're giving you $2,000 credit. Okay? That entire $2,000 credit could be refundable to you if you don't owe. But let's say you're already in the negative and you're owing the IRS $1,400 because you didn't pay enough taxes. They're going to take that earned income tax credit. They're going to give you the full credit, but they're going to deduct what you owe for whatever your deficit is, and they're gonna give you the rest. So we got to know how it works. All right. So that's just the earned income tax credit. Now let's talk about the child tax credit. Most people don't leverage the child tax credit like they can, but for an example, you can get $2,000 per qualifying child under 17. And we're going to talk about daycare and child care expenses as well, because people be leaving that on the table too. Remember, you want to keep your receipts. Keep your receipts for everything. Sometimes the overlooked deductions will help you come out of the negative. Okay? Period. Now, the child tax credit will also help you reduce the amount of taxes you owe, and sometimes give you a refund if you don't owe, just like the earned income tax credit. It's the same way. But think about it. If you have multiple children, you're not just getting one credit now, you're getting a credit per child. Okay? See where I'm going with that? You're getting a credit per child. Now, the dependent care credit, it was designed to help you offset the cost of any type of child care or care for a dependent while you work or look for work or school. Here's what people miss. Not just child care, but also or care. Okay? So if I pay for care for anything for my children through the year, that is considered dependent care. Okay? Daycare, after school programs, babysitters, summer camps, vacation Bible schools that you got to pay for, summer training, summer school. Come on. All of that is considered care, dependent care. And so most people, right? Most people who can qualify for up to $3,000, for this type of credit, they don't get it because they don't know what this is. Right? So when we go out of town, when we're going on business trips, when we speaking, right? It doesn't matter if it's my mama. If I'm paying her, I'm documenting it. I'm writing her. I'm giving her a 1099, right? I'm writing it as an expense. Why? Because guess what? It is a care cost. I'm going to work. You know what I'm saying? Y'all get what I'm saying? Y'all, for you guys who file your grandchildren, you have people who live with you. Dependent care. All right. Now, let's talk about middle class earners. Okay. Those of you who are anywhere in the $75,000, $80,000 up, okay, I want to save you some money because I've seen most of you guys always having to owe, period. Always owing, always owing. And not just, you don't have to be a business owner. I'm just saying in general. Let's start out with people who are not business owners. You're just a higher income earner, middle class income earner. You should be leveraging the retirement contribution deduction. If you got a 401k, IRA, HSA, guess what? Those contributions reduce your taxable income dollar for dollar. Dollar for dollar. So just by you having a retirement plan, it helps you lower your current tax bill. Okay? It's a deduction. It's not a credit. That's the difference. Credits are able to give you money. Deductions just reduce how much you owe. For me, I just rather not owe. If I don't get that back, I'm cool. Because I get, as a business owner, we'll get into that. That's another strategy. We'll get into that. But just think about it. How would you like the money that you put in your retirement for that year help you reduce your taxable income dollar for dollar just by you paying into it this year or your spouse? Okay, so let's give an example. Let's say you contributed $3,000 to a traditional IRA account. Okay, now it just reduced your taxable income by $3,000. How easy was that? How easy was that? Now, depending on your tax bracket, okay, now you got more tax savings. So it depends on, how much you originally owe, how much taxes you pay. Everybody's situation is different. But just know that the basic contribution deduction is taxable income dollar for dollar. Okay, let's talk about the home office deduction. Most of you guys work from home, not just run a business. Most of you guys work remotely from home. You can deduct expenses for the space you use exclusively for work, right? Listen to me. This includes a portion of your rent, mortgage, utilities, internet, maintenance, cell phone bill, whatever it is that you use for work. Okay? I told y'all, this training right here, I can really invoice myself, right? And charge myself for using my home office or using my home as a space because I'm using it for work. Okay? Just think about that. Now I went from, let's say, on the IRS, $5,200. But I work from home. Out of 365 days of the year, let's say I work from home 250, right? Now I'm able to include a portion of everything I pay for the use of my home. For work, I'm able to use it as a deduction. Now, the same things works for those who run a at-home business as well. But most people don't know this. If you work remotely, if you do any type of work from home, whether you're a business owner or not, it qualifies for the home office deduction. Okay. Now, let's get into some strategies that the wealthy use. Now, this is my bread and butter right here. How can we use the tax code legally to get wealthy, to build wealth? And when I say strategies the wealthy use, not saying that we all need to just be wealthy to use it, but how do they think? How are they leveraging? Number one is through business. I tell people this all the time. You need to leverage business. You need to open a business. You need to start a business. Why? Not just starting. Studies show that if you start a business, it is the first step to breaking generational poverty. Okay? That it is the first step to breaking generational poverty just by you owning a business. But not just that. Why do you feel like the wealthy own more business? Why do they say to themselves, you know what? I'd rather own a business. I'd rather start a business. No matter what happens, I'm going to own a business. I'm going to start a business. Why do you feel that way? One of the reasons why is because of the tax strategy. That's really like one of the biggest reasons why. if I can be honest with you guys. One of the biggest reasons why the wealthy do it is for their tax strategy. All right. And so if you create a business structure, whether that's the LLC, S Corp, wealthy people structure income generated activities through businesses to reduce taxable income. It's like that's their sole purpose. And I was like, wow, that was like a mindset shift that I had to understand. I had to understand that by being a business owner, by being on this side of the tax game, I'm able to keep more of what I earn, but also I'm able to leverage the system legally. Does that make sense? It's like most people won't understand that, but it's true. And it's a mindset shift. Most people say, well, I don't want to do that just to help me with tax time. No. It's not just helping you with tax time. It's helping you live a better quality way of life, right? Like one of the benefits is just deducting so much business expenses, like not just the home office, travel, software, equipment, phone, mentorship, vehicle expenses that you use for work, home, office supplies. It's so much. If you're doing anything with like building constructions, rehab, contract labor, if you're having to pay for insurance out of the pocket because you don't qualify, for like Obamacare, like just by me being a business owner, right? I'm able to really reduce the amount of taxes I owe, because here's the thing, I get most of my money up front as a business owner, which is huge because most people, they don't get the money that they work hard for up front. They have to get it after Uncle Sam got it. But when you're a business owner, you get most of your money up front. You pay on the back end. But think about it, when it's time for you to pay on the back end, if I leverage the system correctly, if I have the right tax strategies, if I have the right strategy plan in play all year, I'm not worried about having to owe them forever, because I realize that by me being on this side of the river, right? I call it the river of life. I can leverage legally. Okay. One of the things we're able to do when you have an S corporation, you're able to avoid self-employment tax on a lot of the income. Like right now, that self-employment tax, that's like the biggest thing that kind of hurts business owners, because for those, we're having to pay self-employment tax up front. That's your Medicare. That's your social. That's like you're paying into, your Social Security, because you're not working where a check is taking it out first. So we do have to pay that up front at the end of the year. But hear this when I say this too. Also, for an example, let's say you're earning $150,000 through your S corporation. If you're earning $150,000 and you're paying yourself through your S corporation a good, reasonable salary, and you take additional profits as distributions, that now reduces your payroll taxes. See, it's so many ways. I'm telling you, it's so many ways, and we're not going to be able to touch all of it on tonight. But even if you have a small business, an LLC, you're not even an S corp, right? Even a small business, even if you're an entrepreneur, self-employed, meaning you got a side hustle, you can benefit with a lot of tax savings just by having that LLC. I'm telling you, a lot of you all do work from home. A lot of you all do things on the side. You monetize your talent, your time, your expertise, your value. You should be legally properly set up correctly so that you're benefiting from it. Okay. Another thing that I love that, a strategy that the wealthy use is the depreciation we have on real estate. Depreciation allows us as investors, property owners, landlords to really deduct the cost of buildings over time. That reduces our taxable income. Let's say we purchase a rental property for $300,000. The value of the property is $240,000. Guess what we can do? We can deduct $8,700 a year for 27 and a half years. All because We bought the property for $300,000, but it's valued at $240,000. That's $8,700 of depreciation. So we have our depreciation combined with our rental income that can offset other income, reducing our overall taxes to the IRS, allowing us more freedom to build wealth, allowing us to keep more than what we have to pay. Okay, y'all, are y'all with me on this? And so, yeah, it's a lot. I go into it. Come on, I go into it. This is what I mean when I say you want to have. You don't just want to have a person who does taxes. You don't want to just have a CPA. You want to ask the right questions. You want to know what you qualify for. You want to know a strategy for the year. You want to know how you can change the game and how you can use your tax strategy to build wealth, period. Okay? Most of you guys are not writing off your charitable giving. You don't even do charitable givings like you could if you knew how powerful it will help you reduce taxes. Oh, listen, charitable contributions reduce taxable income if you itemize. Now, let's say, for instance, if I donated $10,000 all year, I'm sowing, I'm giving, I'm going up here giving to the Goodwill, I'm down here giving to the church, I'm sponsoring nonprofits, I'm sponsoring food at events. All of this is considered charitable contributions, okay? If I donate $10,000, that could reduce my taxable income by $10,000, saving me about $2,200 if I was at a 22% tax bracket. Right? So let's say now if I owe the IRS, if I was in the red for $3,000 and I did that, I'm now reducing that $3,000 by $2,200. Now I only owe $800. See how I'm going with it? See how I'm going with it? Or many of you guys, the DAFs. A lot of people don't know about the DAFs. A lot of people don't know about the DAFs. But if you research DAFs, these are donor advised funds. You donate strategically over multiple years for maximum tax efficiency, meaning every year you're giving a certain amount every single year. You know how much you need to give every year, and you give it every single year. And this is what I teach in the Funding Accelerator about the community lending, CDFI funding, how you can go and get approved for funding without the traditional requirements like a big bank. They don't ask for a lot of credit. They don't ask for bank statements. They don't really ask for tax returns. These are those type of funds. These are donor advised funds that people donate and give millions of dollars to every single year to help them tax time. That's where that money comes from. That's why it's not like Chase and Wells Fargo. No, these are donor advised funds. Perfect example that there are people who make up there making money. They give a lot away to help them tax time. Okay? Investment planning. All that. So many wealth strategies, guys. The 529 plan, HSAs, the IRAs. Use it estate planning to reduce your taxes on inherited wealth. So much, guys, that we can tap into. I'm telling you. But the biggest misconception is that the IRS is punishing us. The biggest misconception is that the IRS is punishing us, and we shouldn't have to owe money on what we pay taxes on what we owe on the money that we make. And I 100% understand that. But until the laws change, guess what? We got to. Okay, but I'm here to tell you guys that legally, if you learn how to dominate the tax game, the tax code is full of incentives. It's full of ways legally to help you reduce taxable income. It encourages you to be a business owner. It encourages you to be an investor. It encourages business activities and savings because they don't want to just take your money. It's not just rules to take your money. It's a system designed for planning, wealth building, and legally keeping what you earn. But you got to learn it, right? You got to learn it. And I'm telling you guys, tonight, for those of you who have questions, inbox me. Send me a DM. Say, Brianna, I need you to review my past tax returns. I've been on so long for so many years. I'm trying to see what I'm doing wrong. I need you to go back. Well, shout out to one of my clients. I think I saw her on. We were able to go back for the last 3 years and find some things that she did not know that she could legally write off. And thank God we were able to amend those taxes in time. And she had a $3,200 check in the mail. She had a $2,200 check on the way, and I think a $2,700 or $2,800 check on the way. She just got one, which was $3,100, $3,200, one of those. And so we were able to show her how to go back and get that money she left on the table. Come on. Somebody say wealth building. Somebody say wealth building. Now every single year, she ain't got to worry about overpaying and leaving money on the table because her girl, Brianna Anderson, got her tax strategy on lock. Drop some fires in the chat, guys. Was this good tonight? I apologize about the technical difficulties. I got about 20 more slides. So what we're going to do a part 2 next Thursday, same time, 8 p.m. All right. And we're going to get into more because it is so much more. I want to break down the tax code with you guys, line per line, precept per precept. I want to break down the different contributions. I want to break down the different itemizations. I want to break down the different deductions so that you'll know what to do and how to do it so that tax time you're not worried about, hey, am I getting all the money I'm supposed to get? What do I need to do? If you want to learn how to use your tax refund and the tax code to build wealth, inbox me. Say, yeah, Brianna, I want to learn. Say, yeah, Brianna, I want to learn. This is what I want to do. I want to build generational wealth for my family. I want to build generational wealth for my children. You guys saw that today in honor of National Daughter Day. National Daughters Day, you know, I went in and I unsubscribed some subscriptions that really I wasn't using, y'all. Come on, we connected stuff. I went through and I pulled a list of everything I wasn't using. And I said, you know what? I got REITs. Let me invest my daughter in a REIT. Let me open her a custodial my mouth is just kitty so tired because I'm so thirsty. I created her an account and we got her invested in a multifamily REIT, which is a real estate investment. It's kind of like a stock, but it's not a stock. So for instance, the REITs that I like to invest in is real estate. And I specifically like to invest in REITs that are multifamily because if I invest in multifamily REITs, I know multifamily landlord company owners, they're going to keep producing properties. And remember, multiple incomes are better than one income. So just think about it. If I invested in just a REIT from a company, that's just one dividend coming in from that one company. But what if we invested in a REIT that owns 500 properties, 5,000 properties, 20,000 properties? Then, of course, the dividends are going to be bigger because that's a bigger size REIT. What they manage is bigger. So it's really not about the money that you invested. It's really about who you invested with. That's another story. But you guys know. I'm the girl. If you want to get into gold, day trading, stock investing, crypto, whatever it is, comment, inbox me the word. Say, Brianna, I'm ready to become a wealth builder. I am tired of not building generational wealth because it's time. It's not about becoming rich. I am not in the wealth building industry to become rich. That's not my goal. My goal is to never be broke another day in my life, right? My goal is to have more time freedom than I have money freedom, meaning that I'm able every single day. I'm blessed to say I can do whatever I want to do. Money doesn't control me. It doesn't hold me. Like a job doesn't contain me. That's for me. That's wealth. To me, that's wealth. So what is your definition of wealth? What is your wealth building plan looks like? What is the destiny that you have for wealth looks like? My destiny for wealth is that my children can be investors. They can be wealth builders before they turn 18. My wealth plan is that they don't have to start from scratch like me. My mom gave me the knowledge. And she planted that seed. I'm going to plant the seed and give the knowledge, and I'm going to give the finances. Come on. I'm creating them a ladder. And so that's what you have to ask yourself when it comes to building wealth. And so I just opened my school community where I'm going to be showing women the Wealth Build Her school community. We're going to be learning about how to build wealth. That's all we're going to be talking about. Gold, silver, crypto, real estate, REITs, stocks, IRAs, budgeting, day trading, everything. Sole purpose is to build wealth. All right. So I love you guys so much. Thank you for joining. Remember, we're going to be in Columbus, Georgia for the Ascend Zion gathering this weekend. It kicks off tomorrow night, but we're going to be speaking on Saturday. I'm super excited. My hubby is on. I am on. I think I'm closing out Saturday. So it's going to be phenomenal. So if you're anywhere near the Columbus area, make sure you meet us there. It's going to be power packed. I mean, it's some power packed speakers. We're excited. We are always excited to build. I think Saturday is the business summit. So, Ascend Zion is definitely kingdom. It's definitely for those who are looking to build wealth, in the area of finance, kingdom strategy, alignment. I'm telling you, we are in that season where God is giving us strategy to get wealth. And I'm telling you, it's not just for us to be wealthy in the world, rich in the world. I'm telling you, it's for us to be wealthy in the kingdom, build wealth. I'm not going to tell you what the Lord gave me. I'm about to tell you something I got to say for Saturday. But he said this was the season. This was the season. I decree that over many of you, areas in your life where you feel like it's keeping you stuck, where you feel like, man, how do I break out of this cycle? All you got to break is the poverty cycle. Once you break out of the poverty cycle, you're going to watch your life shift like never before. That's what the Holy Spirit showed me. He said, Brianna, once you break out of the poverty cycle, the enemy can no longer hold you. Anything you put your hands to do, it shall prosper. Anything you research and you learn to do, listen, there are things that I've done that absolutely didn't work, and I'm fine with it. It wasn't. I'm on to the next. But hear me when I say this: there are things that I put my hands to do that they prosper. There are things I put my hands to do. There's a lot of things I've invested in. There's a lot of things I've started, and it was me. But everything that God put my hands to do. Ask the Lord, what is it that God will put your hands to do in this season, and get right to it. All right, guys, I love you so much. Somebody say, yes, you can schedule a call. A consultation with me is only $97, but it's not just a consultation. If you want to make it's whatever you want to make it. If you want to make it a wealth building call, strategy, funding strategy, life strategy, whatever, it's just $97. Click the link in my bio. It should be a link tree, and it should be schedule a call with me. We sit down and we create your entire wealth building plan. What does it look like for you? What do you want to invest in? What can you financially afford? How can you come out of debt? How can you break spirits of poverty? What are some of the areas that's holding you back financially? What are some of the mindset areas that you need to break away from? What are some of the shifts that you need to do? I'm telling you, most people are just not mentored in this area. Most people are just not mentored in this area. Most people don't have the wealth builders mentality. When you learn how to have a wealth builder's mindset, you will never see money the same, and you'll never see wealth the same, because you'll start realizing that wealth is no longer about money. Wealth is abundance, and you'll start seeing that money is just a tool. It's just one piece of the pie. It's not the whole pie. And so that's why it's so important that we have to get the wealth mentality first. We get the wealth mindset first, so that we can see everything in its proper perspective. All right, guys, I love y'all so much. Thank you for joining. Thank you for tuning in. I will see y'all this weekend. For those of you who can't make it this weekend, I'll see you next week, same time, Thursday, 8 p.m. God bless you.